Good morning, everybody. Welcome to another daily market report brought to you by Mike Bjork. Today is Thursday, and it's July 18th. Sorry about that. I had to think about the date here. We do got some data here on the economic calendar. As always, every Thursday we get the weekly jobless claims, so we'll start with that. Last week's number was revised 1,000 lower, so we had 209 last week, and it was revised to 208. Forecast was calling for 220,000 for this week, and it came in less than that. So that's obviously good news. Pretty strong job number right there. This is also important data because this week's initial jobless claims will be the sample week that the Bureau of Labor Statistics will use in their numbers when they determine their jobs numbers for the month of July. This will be released on August 2nd, so we'll have some time. But because these are pretty strong, low numbers here, this will only help help in those numbers that the Bureau of Labor Statistics will release and basically show that's a strong number here for the month of July, or at least that's what we'll expect. Manufacturing in the Philadelphia region. So we got the Philly Fed. As you recall, Empire State Index earlier this week went from negative to jumped up in pretty good positive territory. We're seeing the same thing here in Philly. Even though it was on the cusp of negative, it wasn't quite negative territory in June at 0.3%. It jumped all the way up to 21.8. So it's the best we've had all year, actually. So it's a good sign there. Last but not least, we got the leading indicators for the month of June. This just kind of gives us an outlook for the next 6 months. And we had 0% in May, so showing that the economy is going to slow to almost a screeching halt to actually contracting here in June here by 0.3%. So let's jump ahead here to the headline news. Stock market's down. The S&P 500 has actually been kind of going back and forth a little bit. It's kind of barely in the red, but kind of barely in the green or black, going back and forth a little bit here. But however, at the time of this report, stock market is down. We got more corporate earnings reports. Two of the headlines were United Health, and then we also had Netflix. The one big thing about Netflix was it had pretty big significant drop because, well, they had 126,000 people subscriptions that basically got canceled last month here in the U.S. So that was kind of probably a surprise for them. Last but not least, China talks. It's been kind of on the docket all week, really. There's still that sentiment still lingering. We had Trump's tweets talking about, I guess the talks aren't moving as fast enough. So investors are a little bit concerned. Steve Mnuchin came out and talked about it. Basically said that they'll be meeting with them, their congregation soon, but they are still ongoing talks between the two. As we last reported, before they got split for their talks, we're about 90% of the way there. So it's probably reasonable to think that the last 10% are probably the toughest part of the negotiations, where they're the furthest apart, and this is where they need to kind of work through. So this is probably why it's going to take a little bit longer than what most people would like to get through. And of course, China's going to be probably a little dug into what they want, and the U.S. is going to be dug into what they want. So they have to find some type of bridge to work their way through it. So let's jump ahead here to the bond market, see how interest rates are playing out here. So yesterday we had that nice little rally. We jumped from the 25-day moving average, topped the Fibonacci level here, so which is a good sign. We've been fighting it for a month and a half since early June, as you can see here. Since early June, we've been trying to break above it. We've had a few successes, but only to fall down. So we're up against it again here, and so yesterday we did get the better pricing. I released my report a little early in the morning as it was trending upwards. It indicated that we could see better pricing, which most lenders did come out with the better pricing. Today we're starting it here. We're dipping it down a little bit because we're kind of in this pass here, which is, like I said, this is a pretty strong floor of support or ceiling of resistance, which was a floor support when we were above it. But again, it's been a stronger ceiling than it's been a floor here for us. The good thing for it was we've had this crossover here. This is what's kind of helping us, but we're starting to see a possible another crossover here. As you can see, these are getting kind of close to the red and the black here. Possibly see another one as well. So if you look here at the yields, they had a crossover as well, which is why you're seeing the trend downwards here. It did land on that 25-day moving average, which is acting as a floor of support. We're down to about the 2.07 range. And again, so is going to get a double layer here. We got the Fibonacci and the 25-day moving average, which might help yields here. But again, we got a lot of room here between the 25 and the 50-day moving average here, at least about 12 points here, which could, obviously push the rates up much higher if it continues up that way. So, anyways, rates are unchanged today. Mortgage rates are the same. There's no pricing difference on there, as we had a pretty good rally in the day yesterday, and right now there's not a lot of movement. So that pretty much wraps it up. If you guys are looking to buy or refinance, contact me. I am a loan officer. My company serves all 50 states, so we can help you in any state you are located. We do have a couple of proprietary loans programs. We have the Home Funded for those who need some down payment assistance. It has some very unique features which can help a lot of people, from college grads to those who are getting married as a wedding registry, to first-time homebuyers, or those who are basically have had some type of catastrophe. Here in California, we have the wildfires. Other places could be hurricanes, tornadoes, stuff like that. This could be an avenue to help you to find your next home if you had suffered any catastrophe or damages to your current residence. Also, we got the all-in-one loan. This is a great program for those who have cash flow and want to pay off their mortgage much quicker and save themselves thousands of dollars on their interest payments. So this is a fantastic loan here. And of course, we got the main loans here. We got the jumbo, we got the conventional, we got the FHA, VA, USDA. Then on top of it, because we are a mortgage lender, we do have some niche loans that some people do not carry, like your investor loans. We got the loans where investors, where they could basically measure the ratios between the leases of the properties, of the market rents, to what the house payments on there. So we can do that, or we can basically do what they call a no ratio loan on there. So again, those can help out a lot of investors. We got bank statement programs, where those are fantastic for our self-employed borrowers out there that tax returns aren't quite helping them qualify, but they show enough on the bank statement that they can go ahead and repay their loans. So we can do a bank statement loan. And of course, we got 4 national loans. If any of these loans you need some assistance, please direct message me or DM me. I can definitely, we can schedule time and we can talk. You guys have a great rest of your day. Thanks so much for watching. We'll catch you guys tomorrow. Bye-bye.